I'd like to chat with you a little bit about the talk of the problems in the financial services industry that we've been hearing so much about, because there's a great difference between a bank and an investment bank and a savings and loan and the various types of corporations that work in this market. So let's talk a little bit about how our model is different, stable, and sound. Community banks intermediate deposits and loans in the same community. By that I mean we gather deposits in the community from people that we know, and we lend and make investments to people in the same community that we know. Now this is in stark contrast with the Wall Street model. They may use some deposits, but most of their funds come from the markets themselves, from people that have excess money short-term to put out for investment. The deposits that we recycle as loans are done in accordance to time-honored standards. In the mortgage area, for example, it's long been understood that about 25% of your gross is a very comfortable payment that you can make for your mortgage. Now, in that particular situation, when you apply for a mortgage, our process, time-honored for decades, is to validate that income with a W-2. Likewise, we evaluate the collateral of your mortgage by having a specific appraisal done. In the securitization model, things were done less rigorously, though quickly, and maybe to a greater volume, but didn't have the specific rigors as to addressing the question of whether you had the capacity to pay or the character to pay. Whereas in our case, we did that, and in their case, the people that ultimately ended up owning the security that was backed by the mortgage really had no connection with the understanding of the capacity of the borrower or their ability to pay or their character for that matter. Ultimately, after you do the underwriting of who is going to fund the mortgage and or the loan, and where is it going to ultimately reside? In our case, it resides in our portfolio. So we really do care about the character and the capacity of people long term, and the contract, of course, is for the monthly payment over a period of years, 5, 10, 15, 20, 25 or 30 years out. It's really about that stream of payment for 240 payments or 300 payments or 360 payments. Has nothing to do with the availability of markets or money or even the value of that stream of payments. It really has to do with the borrower being, getting out of bed in the morning and going through the daily routine and as business as usual, and that process is in balance and works, rain or shine, war or pestilence, good times or bad. So now that you understand the basic differences in our model and their model, that is, our model is recycling deposits and loans with people in the same community where we live, work, and play, and we're using very stable pools of funds, residual pools that are there primarily for the very basic reason of running the enterprises, versus the Wall Street model where everything is for sale, everything is bought day in and day out, and is subject to the psychologies of the society in which those markets operate, and thus are susceptible to many influences which may have nothing to do with the underlying transaction. But when there is trouble and fear, then that very easily can destabilize the situation, and that's where we find ourselves. So in conclusion, the good news is this too will pass. We, the 6,000 other banks that are doing just fine and paying attention to our knitting, lending directly to people that we know, as it has been said, if you're lending your own money, and I mean our money as a community, to one another, you tend to business in a far different way than if you're renting on the fly money from one place and applying it to another. I think you get what I mean here. So, quite literally, if you're okay, we're okay, and that truly is one community working together, your bank, your community. And that's why we are safe and sound, because this community and we all working together are safe and sound. Thank you.